What's up, everybody? This is Sunko, the Korean bro. Today is 2023, January 23rd. And today, let's look at stock market, okay? Uh, okay, let's see. Banks are building reserves for a potential recession. How bad do they think it will be? Is it time to sell this top dividend stock? Three stocks to avoid this week. Here's why Shimbu Inu could outperform Bitcoin 2023. Let's see what that is. Better buy Tesla versus Alphabet stock. Two stocks, blue stocks. The smartest investors are buying hand over fist in a not the bear market. Hmm. This recession indicator hasn't been wrong in 56 years. Here's what it says happened next. One tech stock you'll be glad you bought when the bull market starts. One stunning growth. Stocks set to soar by 2,700%, according to Kathy Wood. Hmm. Here's where Tesla's next gigafactory might be and why the stock is a buy now. Okay, here's why Shimbu Inu could outperform Bitcoin in 2023. Okay. Bitcoin tends to be more stable than altcoins like Shimbu Inu, but in a bull crypto market, this could favor Shimbu Inu. Okay, let's see what that is. Crypto has gotten off to a pretty good start in 2023 after a horrid year in 2022. 2023 is off to a precarious start with the market higher, but a lot of uncertainty in the air about economic and market conditions moving forward. Crypto has begun to poke its head out with the price of Bitcoin rebounding nicely, and recently topping $21,000 in hopes of cooling inflation and a weakening dollar. While I don't know what the future holds this year, if inflation keeps coming and the Federal Reserve stops raising interest rates, there's a chance for a more bullish year for a broader crypto market. In a bull market and more of a risk-on environment, I see the potential for the popular Mammoth token Shimbu Inu to beat Bitcoin in 2023. Here's why. Okay. Shibu Inu is like the alternative, I guess. It's just like Bitcoin, but it's like the alternative over Dogecoin. So I'm just gonna skip. Okay. Two stocks, blue stocks. The smartest investors are buying hand over fist in a Nasdaq bear market. Bridgewater Associates and Renaissance Technologies were among the best performing hedge funds of 2022. While there were many stock splits over the past year, not all were created equal. Alphabet and Amazon both hold industry-leading positions in large and growing markets. Okay. Alphabet, Amazon. Okay. This recession indicator hasn't been wrong in 56 years. What it says helping us. The Treasury bond yield curve spells trouble for U.S. economy. Federal Reserve monetary policy suggests the Dow Jones and S&P 500 and Nasdaq companies are still a long way from a bottom. There are a number of smart ways to invest in a challenging economic environment. Okay. One tech stock you'll be glad you bought when the bull market starts. The video streaming is the future of entertainment. Roku is at the forefront as a leading viewing platform in North America with plans for global expansion. The company has shown strong growth in sales, active accounts, and streaming activity, even during a challenging market with high inflation and cautious customers. This is a great opportunity to buy it while the stock is available at a deep discount before the economy picks up and the next bull market starts. Roku. Let's see. Wow, 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 wow. Okay, okay, yeah. 2018. Mm. Okay, 2018 Roku. Let's see. Let's talk about the hot stock in the tech industry that's flying under the radar. Mm. And there may be a pizza and a movie at the end. The tech sector is often a fertile hunting ground for growth investors in search of rapid innovation and disruption. At the same time, value investors are on the lookout for great companies with game-changing ideas whose long-term plans are easily misunderstood by market makers with a shorter investment horizon. Again, many tech stocks fit that description to a T, especially in lengthy bear markets. Furthermore, tech stocks are typically highly volatile, leading to deeper discounts during downturns. So both growth hounds and value chasers can find what they're looking for, where Wall Street runs through Silicon Valley. So let's find a bit of both right now. In a single ticker, when the economy gets back on its feet and it kicks off another bull market, you will appreciate having bought this stock in the deep discount sale known as January 2023. Misunderstood growth stock. Simply put, I think Roku is the best buy on the market these days. I mean, it isn't a close race. The media streaming technology expert has lapped the runner-up. If you are not buying Roku stock right about now, your different world must be very different from mine. We could still be friends, but more like long distance pen posts than tailgating buddies grilling ribs every other Saturday in September. It's okay, I'm not mad. Just trying to understand why we're not busy punching Roku's buy button already. You see, video streaming is clearly the future of entertainment. Video streaming. That reality has been obvious to me since 2006 when I did a deep dive on the state of the video rental market. 4 years later, I had cut the cord on cable TV, relying on streaming services like Netflix and YouTube instead. As a movie buff with young children, it was rough going at first, but things got better quickly. The Netflix catalog grew much more extensive and diverse, soon to be joined by more content from Hulu and Amazon Prime Video. These days, every media company wants to compete for streaming subscribers. That's where Roku comes in. As a service agnostic technology specialist, this company stands to win as long as the media streaming industry is growing. And it doesn't matter if Netflix, Disney, or Amazon becomes the most popular media portal in the land. All of them need to support leading viewing platform. In North America, that's Roku. Global expansion is next on the menu, multiplying the company's target market many times over. Hmm. And a bargain all in one. So Roku's long-term growth prospects are fantastic. All on top of the streaming platform market, Roku is digging into video advertising and its own original content, both of which should add substantially to the long-term revenue stream. However, investors are ignoring that obvious growth story for the long haul, focusing instead on temporary weakness in the digital advertising industry. So Roku's sales grew by 15% year over year in November's third quarter report, while the number of active accounts increased by 16%, and hours of streaming activity jumped to 21% higher. And Roku's price is down 70% in 52 weeks. It's a deal. It's the sale of the century. Okay, maybe not of the century, but you get my point. You just don't see fire sales just drilling every day. Okay. Okay. It's it's an opinion from the guy named Anders Balland. Hmm. Foolish technology and entertainment specialist. Uh, Official fool since 2006, but a gesture all his life. Coyotes and time as an abstract. Okay. Anyway, he believes that investing in Roku is the right move, and that the fact that uh you disagree with him is like totally something the point that he never gets. You know. Anyway, let's go on to the next one. History says Nasdaq could jump 51% in 2023. Um, CrowdStrike Holdings. Okay, let's look at this one. There's some challenges still for tech growth stocks, and we have if the recovery trend continues in history does repeat for a stock market. Here's why cybersecurity powerhouse CrowdStrike might be one of the best stocks to buy. CrowdStrike Holdings. Companies are increasingly investing in cybersecurity. Global consulting firm PwC surveys hundreds of the world's top corporate executives each year. In 2022, those leaders said a cyber attack was the number one threat to revenue. PwC's 2023 survey was just released, and that executives were asked how they plan to mitigate geopolitical risk. Almost half said they would increase their investment in cybersecurity, which was the top response. Moreover, 25% of respondents believe their business would be either highly or extremely exposed to cyber risk over the next 5 years. That's why CrowdStrike might be one of the best stocks to buy right now. Cloud-driven digital transformation in the corporate sector have led to a spike in the vulnerabilities because attackers can strike from anywhere in the world. CrowdStrike is a cybersecurity industry leader with 23 modules that protect everything from the cloud to the endpoint. The company also has a market-leading artificial intelligence engine that crowdsources millions of data from customers to rapidly learn and improve. Okay, this company gets a lot of data from customers and collect the data and use it into create something meaningful data. Okay. Many cybersecurity providers lean on AI because it can protectively scan for threats and catch them before they do damage. Okay, many cybersecurity providers use protection and use AI because they can positively scan for threats, right? Mm. And then catch them before they do damage. Okay. Plus, its response time can be much faster than the typical human response. Okay. CrowdStrike is on track to grow revenue 18-fold from 5 years ago. Okay. CrowdStrike's growth has been phenomenal across several metrics. As of the third quarter of fiscal 2023, the company had 21,146 customers, which included over half the Fortune 500 companies. For context, it only had 1,242 customers 5 years ago in fiscal 2018. Revenue has skyrocketed over the same period. CrowdStrike expects to deliver over $2.2 billion in the fiscal 2023 full year. CrowdStrike Holdings. Okay. It still might have plenty of room to grow because its addressable market continues to expand alongside rising demand for advanced cybersecurity tools. In fiscal 2023, CrowdStrike valued its opportunity at $76 billion. So its revenue suggests it has only scratched the surface, but by 2026, it could more than double to $258 billion through a mix of organic growth and because the company intends to offer more products and services. While CrowdStrike is a great buy ahead of a potential market rebound. CrowdStrike's customers love the platform. The company's net revenue retention rate sits at 123.9%. So customers keep coming back and use what they provide because they love the service. Okay. which means existing customers are spending 23.9% more than they were a year ago. So existing customers use um their service, and they keep buying more of the service they provide because they love it. Here's why that's key. Investors have sold CrowdStrike whole stock aggressively in the bear market, partly because they don't want to own shares in companies that are losing money since they're perceived as risky. Through the first 9 months of fiscal 2023, CrowdStrike burned $135 million as they continued to invest in growth by acquiring more customers. But that spending for now customers makes perfect sense given the company's NRR. Each customer is effectively becoming 23.9% more valuable with each passing year. So CrowdStrike is right to get them in the door as quickly as possible. So they spend much money on bringing more customers, and then customers are bringing more money at the end. So at the end, what they did was right. Hmm. So CrowdStrike is right to get them in the door as quickly as possible. They shine through in its exceptional revenue growth. Plus, the company has over $2.4 billion in cash on its balance sheet, so it can afford to sacrifice profitability for many years to come. With CrowdStrike stock trading such a steep discount to its all-time high, and history pointing to a strong potential gain in the National 100 Index in 2023, this might be a golden opportunity to buy the cybersecurity powerhouse. CrowdStrike Holdings. Okay, one stunning growth stock set to soar by 2,700%. According to Cathie Wood, Zoom video communication shares may be down, but they are not out. Despite significant macroeconomic headwinds, the teleconferencing pioneer has continued to generate modest growth in revenue and profits. Cathie Wood's price target may seem outlandish, but there are plenty of reasons to believe that Zoom stock could soar from here. Okay, Zoom video communications has gone from boost to bust, but this too shall pass. Okay, in 2020, it seemed that Cathie Wood's stock picks couldn't miss. Her flagship ARK Innovation ETF rocketed upward by 449% for the year, turning her into a Wall Street star. Then the bottom dropped out to the tech sector, and the fund that once seemed invulnerable plummeted, falling 77% from its peak. Wood is undeterred, however. She's been doubling down on her strategy of buying the most disruptive and innovative companies out there. She notes that previous bear markets have yielded remarkable opportunities for investors with long-term mindset. One stock that Wood is particularly bullish on is Zoom Video Communication. It's the second largest holding in innovation ETF, representing nearly 9% of the value of the portfolio. And Wood has put a target price of $1,500 on it by 2026, representing an upside of more than 2,000% for investors. Wood's bull case for Zoom is even more eye-catching, with a price target of $2,000, which would amount to a gain of 2,700%. Can Zoom shrug off its post-reopening hangover in the current macroeconomic headwinds and hit Wood's seemingly outlandish targets? Let's get to the bottom here. Okay. One final, the stock is trading near its cheapest valuations ever, with a price to sales ratio of roughly 4. That's not to say the share price couldn't fall further, but if Wood's forecasts are anywhere near reality, Zoom Video Communication stock could indeed soar from here. Okay. Wow, with 55% of the market in 2022. Recent innovations are Zoom iPhone. Okay, Zoom phone. So they're coming up with a variety of services like Zoom Phone, Zoom Rooms, Zoom Contact Center, Zoom IQ. Okay. digital meeting software integrating chat, email, calendar, phone, and even whiteboard functions into its platform. Okay. Okay, I get it, get it, get it, get it, get it, get it, get it. Is there any other articles that I would be interested in? C3.ai style chat GPT. C3 AI. Hmm. Spotify also cut 60% of workforce. Okay. Okay, let's see. Let's read one last article and then we'll talk about something where we left off last time. We talked about Robush. Oh no, we talked about Block, the company named Block. Hmm. Now let's just move on and let's talk about Block tonight. We watched the video clip of Block last time, right? So let's look at it one more time and then talk about company. Okay, Block the company. It's easy to use, great user experience. Like I said last time, Block the company uses some kind of a hardware that let middle and small sized business owners can use freely, and uh, that little hardware thingy, by using that little hardware thingy, they can uh, use transaction easily. Uh, by just connecting that device into whatever phone you have, uh, you can have a digital transaction. And he's talking about uh, design itself. Like in the past, when we were thinking about digital transaction, we could only think about bulky and like plain design. But now, this company, Square, they came out with like pretty design that a lot of customers uh, can feel attracted to. So, like it's a GUI, a user interface, and what they thought was user interface, and like um, it's design, right? Okay. Okay. The point here is that since they were targeting small and medium-sized business owners, um, they could um, collect a lot of data, and with that data, uh, they could open or they could expand more business. And at the end, what they came up with was loan service. Okay, they were using AI to they were using AI, uh, and, and uh, their AI could be used in the sector where uh, not a lot of competitors uh, uh, mm, thought. So, small loan. Okay, their biggest revenue stream is processing fees. Processing fees. Okay, the biggest revenue model is processing fees. Processing fees. Okay, processing fees. Hmm. Fast growing one is a loan service. So, transaction fee is like their main revenue source, and the next one is loan service they provide. Okay. It's not just a small and medium sized business, but like they were targeting also individual. Very close to half of the revenue, Square Cash having. Okay, they also have like a Bitcoin profit. So this video is mainly talks about Square, the company, and the store of the company, and um, current situation of company, and like exactly how big is Square, you know. Hmm. Uh, but I think I get most of the point here. Their main revenue comes from business transaction fee, and like the next one they have is loan service, and it's coming big. Uh, and from what I see, it's so big that it can be compared to Twitter. Mm. And some even suggest that it can possibly be much larger than what people can think of. Uh, okay. Mm. Mm. And that little hard thingy. It's a piece of hardware that help uh, small and medium sized business owners. That's the point that I get so far. And mm, mm, I think they're targeting the right sector or whatever. Okay, next we have a trade desk. Let's look at trade desk. Oh, let's look at price level or block, and then we'll move on to the next one. Okay, just for double check wise. Okay. Hmm. Okay, 7% up last night. Block. Okay. Hmm. Three fintech stocks that will make you rich in 10 years. Hmm. Interesting. Hmm. Block. Let's read this one more time. Investors who believe that cryptocurrencies, in particular Bitcoin, will survive the current market downturn should consider taking a position in Block. The fintech company started by Jack Dorsey, who also co-founded Twitter, has suffered after it began to focus more on the cryptocurrency. Just as the market for digital coins and tokens began to collapse, over the past 12 months, Square stock has declined 45% to now trade at $71 per share. In August 2021, the shares were changing hands at $275 each. However, while Jack Dorsey is a crypto enthusiast, his fintech company does not focus solely on digital assets. Block continues to run the popular and profitable um, Square and Cash App that are widely used by small and medium-sized businesses. Square and Cash App, okay. So they use a app called Square and Cash App. Okay, I get it. As well as consumers, Cash App continues to add users and grow at a brisk 36% year over year rate. Fans also point out that Block's exposure to crypto is limited to Bitcoin only. Mm. And that the company does not allow trading or payments in smaller cryptos that are susceptible to fraud. Drew, it's an afterpay service. Block is moving into buy now, pay later sector that remains popular with consumers. Buy now, pay later sector. Okay. Buy now, pay later sector. Okay. Particular people under age 30 and is also pushing into traditional banking and money management services through Roundup, traditional banking and money management service. Okay. Which rounds up transaction fee nearest dollar and then invest the money automatically. Long-term asks Square stock could prove the naysayers wrong. The city is among the top fintech stocks to buy. That will make you rich in 10 years. Okay, new point here. Um, pay now and what is it? Pay now, buy now, pay later sector. It's the part where mm, they are focusing on is the mm, huh afterpay service. I think they're doing a lot of services. Let's go to trade. Let's go to stock company website, block company website for last time, and then move on to the next one. Okay. Hmm. Block the company. Hmm. Square. Cash Spiral title TBD. Okay, let's move on to Square first. Millions of brands of all sizes trust Square to accept payments, build customer relationships, and grow their business in store and online. Tools that connect every size of business. Sell in person, online, or from anywhere. Take secure payments from customers, clients, more. Coming back to business with personal touches and rewards. Banking, staff, a tool for every task, one platform for your business. Click below to see how Square Tool works together. Okay, I get it. So pretty much Square's product power GP. Selling with Square. So I get it. The first page that pops up is about the software or hardware that they provide, and their equipment can possibly help uh, customers uh, have their business grow, mm, and tools that connect every side of their business, mm, tools that make their productivity grow, stuff like that. And the next one is Cash App. What is it? Send and spend blank and buy stocks for Bitcoin. Okay. Mm-hmm. More of a Bitcoin application. Okay, so I get it. So tools that help small and medium-sized owners do their business. Uh, Tools that help them uh, mm, do digital transaction. The second one is Cash App. They provide Cash App. It's mainly for having transaction of Bitcoin. Mm. And Spiral, making Bitcoin more than an investment. Mm. I think Spiral is like mm, okay, I get it. So it's more of like mm, tools that help a Bitcoin transaction. Okay, and next one is Tidal. I think it's a music platform. I get it. So their main revenue mm, comes from transaction, right? Uh, Transaction at this point, transaction fee and loan service they provide, and like other ones are like Cash App, Spiral, Tidal music platform, Cash App, Spiral, uh, platform for a Bitcoin. We'll see how it goes. So I think that's about it with Block. It's a fintech company, and it's okay. I get it. Okay, so next one is a Trade Desk. Trade Desk. Let's look at Trade Desk. Yeah, Trade Desk. Okay, this the video that I'm about to watch is explanation of Trade Desk. I personally invested some money into the Trade Desk. I know what they do, but like to be exact, I want to watch this clip and like see how they say about the company. Okay, it's a complicated one. Let's look at the next one. Hmm. Okay, CEO Jeff Green. Hmm. Let's look at this one. Okay, Programmatic. Okay. So far, what I get is that there are a lot of advertisement out there, and people don't want to watch advertisement, right? On TV and wherever they go, they don't want to watch advertisement. And even when we're using Netflix, we want to watch less advertisement and more about contents, right? But then most businesses with advertisements are doing much better than the business without advertisement. So the meaningful so at this point, to sum up, we've got to come up with a business model with advertisement, right? Then with advertisement, people have to use advertisement wisely. Less advertisement, meaningful advertisement, and that's where Trade Desk comes in. Trade Desk offers that kind of service by using data-driven methods. Uh, Meaningful advertisement can be broadcasted, and that's what and he calls it a programmatic advertisement. And 85% of revenue came from North America, but then he moved to China uh, to find a bigger market, I guess. Okay, I get it. So, let's see. The guy named Jeff, the CEO, uh, he has meant it when he first started his business, and like before IPO, he before IPO, he worried about his business and like the future of his business. But then he successfully had its business IPO, and like the shares skyrocketed. And mm, now I get it. Mm. So the future of advertisement lies in Trade Desk, and their main business comes from meaningful advertisement targeting the right people. Let's briefly read a summary of this company and then sum up. Mm. Oh, okay. Trade desk for the one last time, and then I'll just finish this YouTube tonight. Okay. Mm. Trade desk company. Its current price level is 46.13. Uh, okay. I want to read this for the one last time, and then that's it. Okay. The Trade Desk proprietary tracking method is an upgrade from cookies. Tracking method. Okay. A one-time CEO bonus has heavily impacted earnings. Even though the advertising industry is weak, the Trade Desk is still rapidly growing. Okay. In the past months, I realized that, especially during Corona season, the advertising industry has gotten really weak. Uh, Advertising company were not and has not been able to gain profits because a lot of companies and like many CEOs, they have lack of mm, assets, and like uh, they are really not active, but like the opposite of active, because uh, it's this is like a period where people are, you know, mm, pessimistic in terms of doing some kind of investment. So anyway, let's get to the bottom of this news, and then let's briefly wrap up. Okay. Uh, okay. Looking into next year, analysts expect revenue growth of 21% with $1.07 in EPS. The values of trade desk around 43 times earnings. Not cheap, but not terribly expensive either, especially considering the company's young and growing state. And investors will have to see what management says about its 2023 outlook in its quarter four earnings report, most likely in early February. But with how strong the tailwinds are blowing in favor of the ad tech industry, the trade desk will likely project another solid year. I think the trade desk will have a great rebound year in 2023. Investors should pick up some shares before the stock really gains momentum. Hmm. Profits are temporarily suppressed. Okay. Better solution for protecting consumer information. Okay. The TradeX buy-sider platform helps advertisers automatically bid on the best location for its ads across the internet. It's getting a bit long, so I want to just finish at this point, and then I'll come back later tomorrow, okay, or the day after tomorrow. I'll see you guys tomorrow, okay? Bye bye. Bye, Uni. Uni. Call you. Uni. Uni. Hi. Uni-chan. Okay, bye bye.